You're listening to The Whole Truth, a Resources Rising Stars podcast.
Welcome to The Whole Truth podcast. We're back for 2026 and we've started with a bang. Pardon the pun, we've gone into the uranium business here. We've just spoken to George Bauk. He's the Managing Director of Peninsula Energy. It's been a year since he stepped into the hot seat at Peninsula, and what a hot seat it was. The company had a raft of challenges. He took them head on, as is George's way. It's already clear from the results that he's having a lot of success. He admits openly this is still a work in progress, but the share market's starting to beg to differ. The stock has run up from about 50 cents to almost $1 at the time of this chat. And in fact, if you go back to when they effectively recapped the company in August and raised money at 30 cents, the brave souls who bought in then have done very well. George takes us through what the problems were, and I suppose more importantly, what Peninsula's done to fix those problems. The commissioning definitely seems to be working well. He's now set guidance for 2026. He says it's about getting runs on the board, improving the credibility and integrity of the company, doing what they say they're going to do, and that will enable them to tap into this booming market for uranium. He takes us through the macro issues in the US. The US is importing a lot of uranium. It's on the critical minerals list over there now, and they clearly want to become more self-reliant in uranium. George sees a great opportunity to help supply that demand. He takes us through what they're doing to do that, to capitalise on that opportunity, and what that could mean for Peninsula shareholders. George, it's been a whirlwind 12 months for you. You've been in the hot seat at Peninsula now for a year. It was a bumpy ride pretty early on, fair to say. You look back on that, and I think the share price has probably doubled in the last few months. Absolutely seemed to be up and away, helped by the uranium price, which we'll have a chat about. How do you feel about the state of the project now?
Yeah, look, exactly. Been a whirlwind 12 months from when I got in. We've achieved so much in 2025. I mean, building that plant and delivering our first drum of yellow cake in September was a huge milestone. And we announced this week that we've brought on the second of the header houses in Mine Unit 4. And Mine Unit 4 is really all about the success and the future of the project. It's about proving the flow rates. It's about proving the grade recovery curve that we will then replicate in our life of mine model to then underpin the future of this company.
Let's have a look at how you got to this point, because things are obviously looking pretty good now. I think it's probably fair to say it's still a work in progress. The commissioning is still underway, but there's plenty to be confident about now. If you go back to when you started in January last year, what was the problem? Yeah,
look, I mean, the underlying problem was the fact that we had everything built around expecting production to start in March. So the plant was supposed to have been built and commenced commissioning in March last year. That wasn't the case, and we went to September. So you can imagine cash flows, a whole host of things that don't allow you to keep going with your business. We had to pause the well fields because we've only got limited amount of resin capacity on site. So we had to actually pause that for both preservation of cash and the fact that we can't just keep flowing uranium into the plant and keep building up stocks because we don't have enough.
So you threw the anchor out?
100%. I mean, we had to stop, pause, revisit key assumptions in this business. Right?
And when did you do that? What month was that?
Oh, look, I mean, that really started becoming prevalent in February. So pretty much straight after when we really found out that we were not going to complete this plant in March. Now, one thing we've got to highlight is that from the first concrete pour to the first pound of uranium produced was 14 months. Now, it's a $60 million build, and all the dollars I talked to you about today, Paul, are going to be US. So there was a lot of CapEx spent. It's a plant that, whilst it's a simple flow sheet, it's complex. It's extremely modern.
So where you're going here, if I read you right, George, it's not a case of the fact that they dragged the chain on the construction process. There just wasn't enough time allowed for it in the first place.
Exactly.
It was always going to take that long.
Exactly. Yep. And so we had to stop, reset. We then started to see Mine Unit 3, which is the first low pH mine at this project. So it was previously an alkaline leach project. So Mine Unit 1 and 2 were done with alkaline. Mine Unit 3 was the first time we were applying acid to the well field. They pushed out the spacing to 80 feet. We discovered that the flow rates weren't what we expected. So when you couple your wells being further spaced and lower flow rate, your grade recovery curve is going to blow out. So how long it takes you to do one pour in a well field was going to be, instead of 3 months, 9 months. So you can imagine that your flow of uranium going into this plant is just going to take a very, very long time. So we couldn't stick to that formula. We had to change things. So with Mine Unit 4 ahead of us, we thought, well, we've got to change the parameters of how we go about mining that new mine well field. Okay, so that's when we tighten the wellfield spacing from 80 feet to 60 feet.
So you've now got a bore every 60 feet.
That's right. Yep. So we reduced that. We were conservative on the reset plan assumptions, and we put in a flow rate of 12. And this week we announced we're actually seeing 15 coming through. So all things equal, we expect to have production better than we expected of the forecast we put out in August last year.
So the commissioning process started, September?
Yep, that's right.
So September last year, this tighter wellfield spacing. Worth pointing out to our listeners here, George, when we talk about bores, we're not taking water out. We're talking about pumping solution in order to extract the solution that then contains the uranium.
That's correct.
So it's a in situ leach process, isn't it?
That's right.
It's effectively. So very much the same as the one being used by Boss at its Honeymoon project in South Australia.
Correct.
So you increase the more bores, the increased production rates, the more you can extract over the same period of time. So you've increased the production per unit of time, if you like. That's got you more uranium into the plant. You started commissioning in September. Does it work?
Yeah, look, so we have, this project has produced uranium, okay? So it captured uranium on resin and trucked it to a third-party mill, and they used to toll treat it, and we sold the uranium as yellow cake, but it wasn't produced by us. So there is uranium there. We've extracted it from the mine. We're using a different technique, going from alkaline to low pH, and the process plant works. I mean, we're producing drums of yellow cake. Okay, so what it is about now is commissioning, as in get the time between each stage to be more efficient, so we get to the run rate of 2 million pounds per annum is what our capacity is. And then now it's about seeing these well fields get down to a pH of 2. So what we put out today was that we're getting to that pH of 2 quicker than we expected because the flow rate is higher. The next stage of success in Mine Unit 4 is watching the grade recovery curve. So watching the uranium being captured and being presented to the plant.
Just focus on one figure there. You said two
pH.
The production, the steady state production level.
2 million pounds per annum.
So 2 million pounds a year is what you would deem to be steady state production, nameplate capacity?
That's correct.
Right, and you've got guidance of 400 to 500,000 pounds for this calendar year.
Yep.
So obviously you're still in the commissioning process, but you would expect to hit steady state production when?
Yeah, look, so the approach we've taken is that, you can do as many studies as you want. You can do column tests and all the rest of it. What we really need to do as part of this project is to see actual performance. So this is all about to see Mine Unit 4 perform, get our grade recovery curves from actual results in the ground in conditions that are full-scale production, right? Those assumptions will then be put into the life of mine model, which will then show us what our unit costs are, what our capital requirements are, etc. And that'll give us the pathway to go from this 400,000 to 600,000 pounds that we talk about in calendar year 26, 27 and work towards filling the mill, getting to that 2 million pounds. I mean, the next step after that is we actually have a license capacity to go to 3 million pounds. Most of the plant has actually got 3 million pound capacity. The key thing missing is a third dryer. We put a third dryer in there for circa $10 million. We'll get a 3 million pound plant.
But at the moment, you've got enough infrastructure, enough capacity to do
2 million pounds.
So when do you think you'd hit that rate?
Yeah, look, we had to withdraw the life of mine assumptions last year as part of this whole process. So that's what we're working through at the moment.
Right.
So
that's a moving feast.
Exactly. If you have a look at, we've given guidance for calendar year 26, 27, and what we talk about in the presentation we put out last year was that calendar year 28 and beyond, we put when I say conservative, we had to use the assumptions we knew then. We're challenging those at the moment. We said Horizon 3 is about going to 1.2 to 1.5. But, our internal focus is how do we fill the mill? How do we get to 2 million pounds in an efficient way?
These are big production numbers. I mean, you're talking, for example, again, the Boss example at Honeymoon is circa 2.5 million pounds a year. So you're talking big numbers here. What's the inventory like? What can it sustain?
Okay, so currently the resource at the Lance Project is 58 million pounds of measured, indicated, inferred. We've got a large land package going from north to south is about 37 kilometres, from west to east 8 kilometres. And there's so much, I think we've got 104 to 140 million pound exploration target. So that sits on top of the 58 million pounds. So if I just look at the 58 million pounds, we can sustain a 20-year mine life at that 2 million pounds you asked.
Right. And if you look at the share price, as we said at the outset, it's pretty well doubled in the past, 4 months, trading almost knocking on $1 today. So is that the market saying we can see that the changes you've made and the results you're getting show that the project is going to work, production will grow, cash flow will grow?
Yeah, look, it's fair to say that the valuation of Peninsula has been hit with some integrity issues that we had in 2025 about what our previous production guidances were, the fact that we delivered the plant late for 6 months. So you can imagine that there's a real question mark, and that was a discount factor on the valuation of Peninsula. Went into suspension for 4 months, came out, raised money at 30 cents. Now, you got to go back. It wasn't the tailwind that we're experiencing now with uranium when we're raising money in September. We had Boss Energy come out with their first hit of issues right when we were raising money. So you can imagine it was risk off. So, the market the market priced that capital raise, okay? And so, the market deemed we weren't trading for 4 months. They wanted to make sure they had upside, so they priced it at 30 cents. We're now trading, as you said, close to $1. In the last 2 months, we've doubled. When you sort of have a look at the table of uranium stocks on, North American and Australian ASX, the equity markets, we're now sitting at the bottom of the producers, right? So if you have a look at the valuations, apart from, a couple of companies like Deep Yellow, Bannerman in that development stage, in terms of people that are producing uranium at the moment, we're the least valued, right? There's some really good research analyst reports out there at the moment that look at, the valuation gap between us, Encore, and UR Energy, and they're quite substantial. That's for us to give the confidence to the market to show that we can deliver on our promises, and then people hopefully value us with the right metrics.
So the market cap at the moment, $300 million?
Oh, it's knocking on 400. We've got 400 shares out.
So you got best part of $400 million. As that production grows and you hit towards, you just said about the £1 million mark, yeah, that would suggest, given current uranium prices, you're going to be generating a fair bit of free cash.
Yeah, look, you really want to get to that 1 million plus to get to that free cash. Everyone's got views of the uranium price. You've only got to look at supply demand. When you're not seeing new projects coming online, yes, you've got various challenges of approvals and all that, but is it an incentive price at the moment at $85 a pound? Right, and you compare the gold price of where that's gone from 2 to 3 now to 7 Aussie dollars. I think there's upside in the price. Now it's probably the famous last words when you say something like that. But when you even look at it from a US perspective, the US use 50 million pounds of U3O8 every year. Right, in 2024, the US produced domestically 1 million pounds. They're 49 short. Right, they have an aspiration to quadruple their needs of nuclear energy and
so they're very import dependent, as they say.
Oh, 100%.
And presumably from Kazakhstan and other ex-Soviet bloc countries.
Oh, 100%. You have a look at it. They're reliant on key.
So you put it in the whole Donald Trump critical minerals basket, and you say, just like rare earths, everything else, they need to become more self-reliant in production of uranium.
Yeah, look, USGS added uranium 3-4 months ago to the critical minerals list, so that provides a lot of more opportunity when it comes to US government support. The US government has realised in the last 12 months how critical minerals are and how critical it is to have their own domestic supply chain. We've seen investments, as you mentioned, in rare earths that support that, and what you're seeing in the uranium space is they're trying to make sure that they manage the whole supply chain. So they just put out $2.7 billion for the enrichment part, okay? But, the things we've been lobbying in the US government, making sure they're aware that, yep, you can go and build out your capability downstream, but if you go back upstream, you're still going to be reliant on import of your feed.
Yeah, you can't enrich uranium that doesn't exist.
Exactly, and they've seen, the rare earths has lit up that supply chain of, if you don't have it, things will happen. And, they've got the biggest nuclear reactor fleet in the world. They are putting a lot of nuclear energy reliance in their US military bases. There's very strict rules about for uranium to be used in those applications, it has to be sourced from domestic supply. And there's a limited amount of that. So forget what the commercial markets require with the reactors. Think about what the military requires, right? And same with rare earths. You never see those numbers of what they need. But we've Houston, we have a problem.
And this is what you're trying to tap into here with Peninsula. You can see obviously huge demand for domestically produced uranium in the US, presumably given the big growth in data centres and AI and the like, the demand for power, which translates in America to demand for nuclear power equals demand for uranium. So you've got a huge tailwind here.
Oh, 100%. And, just focus in on the US. That's a great opportunity for us. And, that's where our production, that's where most of our workforce is. But then you've also got other competing markets. I mean, Japan's coming on strong. They're bringing on new reactors in the up and coming timeline. So you've got other competing markets.
So what's the now target? People listening to this would say, look, you've obviously done a great job. You've got the thing working. You've proof of concept and then some. How do we drive this share price from here?
Look, one thing that's really critical for Peninsula is to really build on that integrity piece, deliver on promises made. What will be really focused on in 2026 for the success of Peninsula is the performance of Mine Unit 4, right? So we're seeing really promising signs in the first of 6 header houses that have come online. We just put our second one on this week, and watching data points to show and demonstrate the pathway to get to a pH of 2. So, confirming flow rates, adding both acid and peroxide, and then it's all about the grade recovery curve, right? So, over the next 6 months, we're going to start to build up that data set. So we've got header house 14 on now, 16 starts this week, 15 will come on in probably end of February, and 17, 18, 19, so the last 3 will come on.
So you're saying there's plenty of upside here?
Oh, look, that there, and again, we're seeing such encouraging signs. We're getting the rewards for about the way in which we're approaching business, right? So we're bringing this online, we're adding acid on the consistent basis, on a daily basis, peroxide on day one. And when you have a look at the results on a daily basis, we're seeing the rewards for the way the guys are going about it.
So given the outlook for uranium in the US, it's obviously no secret that they're going to need a lot more import replacement uranium. The more results you put on the table that show that the project and the system is working, are you concerned that some of the big boys overseas might be having a look at this, or even the big boys in America, and say, we might have some of this? You could be a takeover target.
Yeah, look, I mean, everything's for sale. We're a listed entity. What my role is, and the role of the board and the team, is to make sure that we present this company and get the best value for the company every day.
And if someone wants to have a crack,
well, we've got great support. Major shareholder sits at 18.4%. They came in as a solid foundation of that capital raise I mentioned. We just had Sprott go substantial this week, 5%. So, we just need to put our head down and really make sure and show the value of this. We've got Dagger, which is just up the road. It's 7 million pounds, double the grade. So we've got upside there. We've got to work out how, we've got to, as soon as possible, show people the true value of this business. We withdrew the life of mine, which takes out that valuation see-through for people. Now they're waiting for us to put that back out there. But we're being more disciplined and saying we need to see the data in the field, and then we'll update that and we'll put that out. So, we know it's great tailwinds at the moment, but we want to show that we're approaching this the way we do business in a very systematic way.
Great. Well, George, thanks for your time. You've obviously done a terrific job. It's still a work in progress, but I think the market's clearly saying you've won their confidence, and you can see it in the share price.
Yeah, pre-season starts on round 1 now.
Great. Thanks, George.
No worries. Thank you.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.